Hi guys, Uncle Dan here. Today we're going to talk about how I'm managing my money when it comes to call options. This is a strategy on a trade that I did today, so I'm going to share this with you real quick. And this is going to answer the question, how do you calculate extrinsic? And then how do you go about rolling your in the money barbell? If you're not familiar with the barbell, right up here, you can click this link. So let's look at what I did today. We're looking at BG. This stock has rallied from 110 up to about 119. And I had a 110 call in there. I bought it for $300 or $3. It was trading at 9. Now, this option expires in a couple days. So the question in my mind is, I'm up from 3 to 9. I don't want to lose 9. Should I be thinking about rolling this? Is there a way to roll it for virtually no cost where I can just take the money off the table, but I still want to make more money if this stock continues to rally, because fertilizer stocks are in a bull market right now and I don't want to miss out. So how do I calculate the extrinsic value of a call? The simple way is to look at the strike of 110 and subtract it from the stock price of 119. So the difference is $9. So if this is trading for more than 9, that value will be the extrinsic. So if we look here, it's last traded at 9, it's bid at 9. So it looks like there's no extrinsic. An easier way to do this, most of the time it works unless there's a dividend, but most of the time you can look across to the 110 put, you can see it's 0 bid offered at 10. So it's trading basically at a nickel. That means that the call is worth the intrinsic value of 9 plus a nickel. So it's worth 9.05. And if this doesn't trade this way, and assuming that there's shares available, and here you can see it's easy to borrow, so these shares are available, then a market maker can go in and basically arb this with the put-call parity. Now we know how to calculate extrinsic. So now, is there an opportunity to roll it? Like, in other words, if the 115 has no extrinsic, then there's no reason why I wouldn't want to roll this and lock in $500. I would have unlimited upside, but I've now limited my risk. Let's just see what the extrinsic is. As you can see, it's 20 cents versus 5. So for 15 cents, I can secure $500. Still make more money as we go up. So those are the kind of strategies I'm always looking at to how to take risk off the table, but keep making more money. In this example, I could have rolled this straight away and then rolled this from the 110 to the 115. Now, what I did is I saw the other fertilizer stocks breaking out this morning, and I thought this stock would go above 119. What I decided to do was to buy the 120 call. I bought this for $1.50, and then I put an order in to sell the 110 call. Instead of at 9, I put an order in to sell that at 11. If you look here, the high was 11.24. So I was able to sell this for $11. So I made almost 400% today on this call, which I've held for a while. This is not a one-day trade. So I collected a credit of 11, and I have to subtract what I spent on the 120 call, which was $1.50. So net, I was able to get a credit of $9.50. That profit is secured, okay? But I can still make more money. If this stock were to hit, say, 125 by Friday, then I could make another 300% return. Now, I still have my 115 call. So what you can see here is, based upon the barbell strategy, I've locked in profits and paid for the 115. But what's interesting, by buying the 120, basically legged into another barbell. But now my out of the money barbell, which was the 115, is now the in the money. And the 120 is my out of the money leg. So the next rally up, I'll be taking off the 115. If the stock can hit 123.50 in the next 2 days, I'll be taking off that 115 call for 1,000% return with unlimited upside to continue with the 120 call. Now, if both of these hits 10 times, I won't be doing any more rolling. There's only 2 days left anyway. That's how I go about rolling my barbells, rolling up to lock in profits, but still keep making more money. I hope this helped you. If you have any questions, leave your comments down below. And as always, happy hunting.